Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Woohoo! Party, party. FYI, just a sort of, I guess, a housekeeping note. We're going to be doing Julian's baby powder report on Wednesday this week. Just an FYI. And Brian will be on Thursday, Friday. So if you are a fan of Julian's offerings, just make a mental note that he's going to be doing his weekly summary report on Wednesday this week, not Thursday. Anyway, good morning. Happy Monday morning. TGIM. We started basically top of the hour, so not so bad. 20th of March. We're through the big options expiry. That was a huge event there on Friday. And as well, of course, we had the Ides of March that we had to worry about there. So we got that out of the way. The only thing left, sort of big hurdle-wise here, is we have the FOMC meeting. I think I'm showing the calendar. Oh, the little TRI logo is right on top of it. I don't know whether you can see that or not. I hope you can. Anyway, we have the FOMC meeting. Good old, actually, in the honor of the FOMC, I am Alan Greenspan today on our Zoom call, for whatever it's worth. Anyway, so we have FOMC here Tuesday, Wednesday. Wednesday, of course, like we said, baby powder report. Probably later on in the day, because that is the FOMC session. We'll throw up a live hangout around. The rule is, of course, that we're not allowed to trust anything that we see in the market for one full hour following the Fed announcement. And what's really interesting I found is about 10, 15 years ago, especially when we were going through the whole, crisis there in 2008 and all that nonsense. But even before that, so many market participants wouldn't do anything for that full hour that the Fed actually sort of manufactured this press conference. And I know a lot of the Fedsters. Interestingly enough, I'm Alan Greenspan here in the Zoom call today. Alan was the chairman of the U.S. Federal Reserve Board there for quite some time back in the 90s and early 2000s. I actually was even the governor through the late 80s as well. And he used to always try and refrain from talking to the public at all, just saying anything. In fact, he had a famous quote that would be like, if you understood what I said, then I was way too clear and not ambiguous enough. So, I don't think these press conferences, and I don't think JP's done himself any favors over the past few years. There's a reason why Alan Greenspan did not want people to sort of listen to him while he was talking, because he knew full well that if you open up your mouth and you say something and something else happens, which 90% of the time is what happens, because the Feds are always wrong. I mean, the last person in the world you want to listen to for sort of economic forecasts is some government bureaucrats. They are the worst at predicting the future. Here's kind of a funny anecdote, because it's a bit of a light news day. I'll give you a funny story. In late 2001, of course, we had the horrific 9/11 events down in the States. Was that manufactured? That's a whole other can of worms. We won't go into that. But that was a particularly nasty time in the market. The dot-com bubble burst. My retail brokerage business basically blew up. Everybody just went on hiatus. And it was like, well, we got to wait for the market to bottom and new trends to start, and then we'll get back to trading again. And I had to take, I often tell students this all the time. You have to do what you have to do to cover your nut. And in that particular case, I had to actually take a part-time job, and it was a really weird job. I was a video conference coordinator for Transport Canada, which is sort of basically like a big government bureaucracy. And literally, and it was for the executive committee. And literally in like late 2001, early 2002, I had to sit there in these executive committee meetings running the video conferencing equipment. And they would just sit there and spend hour after hour after hour debating about, is Osama bin Laden going to be wearing scuba gear and attaching bombs to the bottoms of cruise ships in the Vancouver harbor. And these people took this stuff seriously. Like, and of course, they're on the payroll, they're government taxpayer funded, blah, blah, blah. And they would literally spend hour after hour after hour talking about a past event. There were no terrorist activities that to be even considered going forward. And there was one guy who had the shoe bomber. I don't know whether you remember that. That was probably the biggest worry following 9/11. But it was just such a great analogy that government bureaucrats, I mean, they're the last people in the world that you should be listening to predict the future. So Alan notoriously would always say, if you could actually discern what I'm trying to say, then I'm speaking way too clearly. And I should try and be a little bit more ambiguous. And I think JP got himself into trouble, and all his other crony banksters. They fell into the trap of predicting the future. All through the whole COVID sickness, and they could not be more wrong. They were so brutally wrong with their quote-unquote predictions of what was going to happen. And I tell all of you people, if anything, what you saw out of the Fedsters, and these are supposed to be the smart money, these are supposed to be the people in the know. I mean, fucking Granny there, she was pleading with people to go and buy U.S. Treasuries right at the top of that massive cycle. And of course, all these regional banks just said, okay, ma'am, you know what you're doing. All right, we'll go and buy your U.S. Treasuries. And they got all completely destroyed here because of the complete lack of foresight, understanding. You go and spend a ridiculous amount of money that you don't have. You're going to dilute the purchasing power of the currency. You're going to blow up the budget, going to blow up the books. And of course, you're going to create a hyperinflation scenario. And the bonds are going to collapse in value. Just ridiculous. So, the whole message of this, if there's one message out of today's video, is don't trust the Fedsters and what they're saying that they have any greater skill at predicting the future than you and I, right? Trade your setups. We're not in the business of predicting the future. We're in the business of trading setups. Anyway, blah, blah, blah. There's a fun rant for you. So it's kind of a slow news day today. It's Monday. Of course, I talked to you guys for about like 2 or 3 hours yesterday. So if you're kind of like, well, Brian, I want a big fat dose of the Beamish PMA, go and watch the Broiler Chicken show yesterday. I think it was an excellent offering. Did both, I thought, a pretty thorough analysis of the corn. We also took a look at a few altcoins that I'm bidding on, a couple coins that maybe I missed a trade, but still making some pretty good money. Account balance moving up, so that's all that matters. And then we also did a nice Q&A session. Actually, I really like the way that Chris what do you call that when you sort of put the little sort of section breaks on the YouTube video?
Track during the videos.
Yeah, I thought you did an excellent job on that. That was really cool.
Oh,
Thank you for that, sir. Also, too, I think you got a whole bunch of Beamish rants in there, so lots of fun. Anyway, as I've said before, I think a lot of what you saw happen in the marketplace had more to do with things like huge quarterly options expiry than really a heck of a lot else yesterday. Although, people in the sort of know would be like, well, no, this is all about banking crisis. Is it really? Or is it about, huge money center banks and all that? Or, of course, market makers have to push markets around so that certain options expire worthless or in the money. So we're beyond that now, and what a surprise, the whole market's sort of breathing a sigh of relief. Interesting how, though, it looks like the NASDAQ is coming off here a bit. I did have Japan actually finish down. I do like to take Japan as kind of like a leading indicator for the day. So I get the impression, remember we saw last week, countries like Italy and Spain and stuff were getting absolutely smoked there. So I think there's a little bit of a relief rally happening there. Of course, we had the big deal over the weekend. If I understand correctly, UBS is going to buy out Credit Suisse. Interestingly enough, the headline actually reads that the UBS, no, the Credit Suisse people, their bonds, they're going to have to take something like it's like a $15 billion write down on their bonds. It's a pretty darn big number. That's going to be a tough pill to swallow, I'll tell you that much, by crackers. Of course, it isn't anything to do with these big U.S. money center banks, so I think they're probably like, man, so what? You notice that if any of the big U.S. money center banks, especially like outfits like Goldman Sachs, if they're on the hook, all of a sudden mysteriously bailouts happen right, left, and center. But anyway, I digress. So, as I said there a moment ago, pretty light day today on the Econs. I think if anything, this is probably like options expiry happened. Let's let the dust settle. And we've got some data points coming up tomorrow. In my country, we have inflation numbers coming out. That should be interesting to see how that plays out, considering that the central banksters in Canada actually stopped raising rates. And then, of course, like I said, the main event for the world, keep in mind Canada's, I think it's like 3% of the world economy. It's not really that relevant. But the main event over the next few days, of course, is the FOMC meeting. In fact, we probably should see, there you are, Fed interest rate decisions, FOMC economic projections. I mean, they should just get out of this business. They're terrible at making predictions. Their dot plots are horrible. If anything, it's fine. Maybe it's a good idea that they give the street sort of an idea of what they're thinking, but it's usually very, very wrong. So, and actually, guys like Stanley Druckenmiller, you've heard how much I like to listen to him. He actually takes the opposite trade that the FOMC does because he knows that the FOMC and the cartel, if you will, they often go too far, too often, too much, and they usually break something. And sure enough, they've gone and broke something. So we'll see how that plays out. News-wise, like I said, I thought it was interesting. Mr. Trump is sort of setting up his base to be prepared for him to be arrested tomorrow. Although, actually I was reading through the rags. If anything, it almost feels like it's a bit of a PR stunt. Some other outfits are saying I don't really hear anything about that happening. But nonetheless, this is a case about porn star and hush money and stuff like that. So it doesn't really have anything to do with the insurrection. But be prepared that you might see some fireworks out of him through the week. Sadly, of course, stuff just keeps grinding on there in Eastern Europe. So I don't think that's going to change anytime soon. I don't know. I didn't really see anything else that really jumped out at me. Yeah, I mean, in my country right now, they're still humming and hawing about whether China is too heavily embedded in our country's politics and stuff. It is interesting that China, the leader, Winnie the Pooh, there is heading over to Russia to hang out with Vladdy for a bit, and I guess sort of I don't know, reignite their alliance fire. The interesting thing about China and Russia, though, I watched a really cool documentary. Technically, Russia annexed a huge chunk of China there about 150 years ago. And I get the distinct impression China wants it back. And it could be a huge, huge geopolitical event if they do actually try and get it back. Sort of Manchu area, I think it is. So that was a really interesting documentary that I watched. It wasn't, docudrama. I don't know what the hell you call it on YouTube, but anyway. So I don't know. For the longest time, China and Russia have been kind of at odds with each other. Of course, through the Brezhnev days, Russia gave itself permission to correct China or communist countries if they thought that they weren't heading in the right direction. That gave them justification to invade things like Czechoslovakia and stuff back then. So there's still lots of animosity between China and Russia. So I think, if anything, right now we're living in this funny sort of Winnie the Pooh kind of world where China's not really China right now. China is Winnie the Pooh land. So anyway, we'll see how that goes. It's a light econ day when Brian's barking about Winnie the Pooh. Anyway, so, there's your backdrop. The Americans still kind of licking their wounds, and I suppose the Europeans to a certain degree, over these banking issues. A little bit of a back and forth. The interesting thing is when we look at the price action itself, there's not really a huge movement going on here. Like what I like to do first thing, and FYI, this will probably be a nice heads up for where I've had a lot of people. Of course, we teach the 1, 2, and 3 programs at TRI that gives you a big overview of the entire sort of trading process. A lot of demand from people that, Brian, I could really use like hands-on, one-on-one support, guidance to actually set up my day trading plan. I would like to be day trading, but the course, it's sort of like an overview. Well, these are all the things that I had in place when I was prop trading. So because of that demand, we created this boot camp concept. And there are a number of people that are like, Brian, we want you to come over to Europe. Or wherever we centrally decide. I think everybody collectively was thinking we'd go to Europe because we did have one place in particular in Porto, Portugal, that we were seriously looking at buying to create a TRI campus. I don't know whether that's still on the books. I don't think so, but I would like to move forward with the boot camp because there is demand. And it would be something like, how do you set yourself up? What is the process that you use? I'm a big levels kind of guy. So as you can see, starting my day, I always like to start at the 4 hour, 400 or 243 minute if you're a Tesla fan. 4 hour, you can see the charts are basically the same. And just map out key horizontal support and resistance levels, key Feigenbaum levels, key fib levels, off of this, and this sort of tells me, okay, do I have trade location? And you can see we came up into a 4 hour pivot point and the market pivoted off of that, went a little bit higher and then rolled over. So technically that wasn't a terrible trade location. You can also see on Friday when the market dumped, I think this was Friday, into this horizontal support and resistance level. Well, that's not a terrible trade location. So anyway, as it stands right now, we're kind of like in no man's land. And really, my best day trading I often find is when I have things like Feigenbaums and ATR levels and horizontal support and resistance levels all correspond. So when I looked at this thing first thing this morning, I said, all right, if I'm going to be hunting shorts in earnest, this is probably the area I want to be hunting. Also, too, Monday mornings, you want to be a little bit cautious. Mondays are funny days when it comes to trading. So really nothing serious, nothing in earnest here. And frankly speaking, I would consider that we're just basically in no man's land right now. Did notice that the crude oil continues to march its way lower. We're at the point now where a lot of these futures contracts, we don't even have any horizontal support and resistance levels to work with. So I'd almost be inclined just to let this thing settle out and give me some price patterns, some formations or something to work with, and then I can start drawing my levels. And interestingly enough, you can also see here, I would be setting this kind of chart up for tomorrow morning, so you can kind of see there's ATR. There is a 4 hour pivot, and notice, hey, look, ATR and a 4 hour pivot. So you can already start to see the levels developing. But because crude's moving to new lows, I haven't really been in a big hurry to do anything there. And then gold, which I think is sort of the star du jour. Of course, there's also Bitcoin. But same sort of thing. It's interesting. We did come into this was as of Friday's price action, if I'm not mistaken. Actually, it was overnight. So Sunday, I don't really trade overnight. But what I would say is if we did have a nice little counter trend rally up into ATR levels and just probe that high, we got some sort of top that came in off lower time frames up there. I might take a good look at that. We could probably also do something like a Foggenbaum off of that little range. Oops, I gotta hit the right button though. Boom, there we go. Hey, look at that. So 4669 as well. So hopefully you can see, there's a really good analogy. We have a trade location up here to seriously consider. So I don't, as it stands right now, that's not. If we're ever sort of hovering around settlement, I'm probably not that interested in taking a trade, unless of course it's a well-defined bot setup and I can see lots of momentum. So it's Monday, typical Monday. I don't know. If anything, also too, we don't really have any major econs driving us here this morning. So the econ calendar was very light Monday mornings. Nothing. I mean, we had Lagarde speaking there earlier today. I didn't listen, but I think Chris said they listened. Chris, did you actually listen to Madame Lagarde, or did you just sort of?
Oh no! I did not say that. No. I mentioned that it was she was going to speak 2 times today, but that was about the most of the econs that I saw when I was trading earlier today. So
right.
I didn't get a chance to listen to her though.
So I wouldn't be surprised if there was some sort of pivot in the market around something that she said. That's pretty typical, especially if there's no real other news driving the market. So pretty light news day, pretty light econs day. It's a Monday. It's the Monday following an options expiry. Maybe everybody just cool your jets a little bit. I don't think we need to be in a huge hurry to do too much here. Of course, everybody watching Bitcoin. So we have our 4-hour charts. Notice, we're starting to get a little waffly up here. So, this, we can just find out the move stop to trailing level. FYI, actually, I'm a little bit under the weather here. I don't know whether I said that to you guys or not, but I'm not feeling very good here this morning, so... If you do see me sniffling and coughing, it's because I think Liam had a bug yesterday, and I unfortunately picked it up. Anyway, 28,550.56. Don't forget the 0.56. I think that was the sort of move stop to trailing level. And I actually haven't even written this up. You can see I was sort of in the process of writing that up. So our high here, this little doji peak, 28,567. So we have technically hit the move stop to trailing level. And also, too, remember we talked about this at length yesterday. Are they going to go and set some sort of top up off the top of this megaphone? Remember we looked at this on the daily charts, and I still think this is what's going to happen here. It's going to be some sort of top that's put in here just above this megaphone. If this goes and ends out here or through this FOMC and we start dumping, look out, folks. This could get really, really nasty quickly. So just be forewarned. There's nothing, again, it's a Monday. You can even see, based on this daily chart, there's no real price pattern here. If anything, maybe... through the day, actually I didn't want to do that. Maybe through the day, what this carves out is the beginning of some sort of fractal top. Right, down a fractal top. You got to be an 80s latchkey kid to know what the hell that reference is. Down at Fraggle Rock. Actually, I wonder if Fraggle Rock is even a thing anymore. Anyway, it was pretty popular when I was a kid. Anyway. So you can see what that topping pattern's kind of trying to look like here. We did go to a new high here on this candle today. So I don't think you're going to get any sell signals per se off of today's action, and that kind of makes sense, right? No, the FOMC is Tuesday and Wednesday. And Wednesday, of course, is the announcement day, and we're not supposed to trust the first hour following a Fed announcement day. So really, back to that. So somebody over there on YouTube said, "Isn't the Fed today?" But if we go back to that Fed announcement, I don't think you can actually even believe anything that you see even in the marketplace until 1 full hour following 11:30 a.m. my time. I don't know where you are in the world, Sean, but a full hour following this event here. So actually, there's the interest rate decision, 11 a.m. If it comes out at 11, great. I don't think we can even interpret anything about what you see happening in the marketplace until probably about noon, 12:30 my time. And only then can we really sort of decide whether we're really going to head higher or lower here. Right now, I would, and if anything, looking at the price action, doesn't it looks to me like they're setting this trade up now, and making any grand decisions about what you see happening here in the marketplace right now, I think is actually asking for trouble. You can't really come in on the buy side there. If you did come in on the buy side through this cute little consolidation here, and you're starting to get a little bit chicken shit, which is perfectly fine because, hey, money riskers by definition should be at least partially chicken shit. I mean, that really, I mean, if any of you have ever actually worked at a prop firm, half of the time you're worried about just keeping your job. So if you're kind of like, we've hit the move stop to trailing level, this empire pattern has technically confirmed. So, think of the Empire States Building. If we go through this low here, that's actually a sell signal. I don't know whether that's enough to get me to balk, but if you were kind of like, Brian, I don't need to be a hero. I made some good money on this long. This is, are we in divergence? Whoa-wee, look at the size of that divergence. Look at RSI spitting out divs. It'll be interesting on Wednesday to see what Julian thinks of his RSI. Willie is officially stupidly overbought. This is half of the reason why I built this indicator. Is I used to have guys and it would drive me crazy, but geez, it's remarkable how often it happened. But I could literally set my watch that when I see this yellow line go above this -20 level, all of a sudden the phone starts ringing. I want to buy, I want to buy, I want to buy. You're stupid. Buy when it looks like this or like this, not when it looks like this. This is one of the tools that I built. It's a heavily modified indicator. And we teach you in our education program. And I tell you, this one indicator will keep you out of a lot of trouble in this world. So anyway, you can see what the indicator looks like. It's flashing warning signs. And we are getting the divs. The divs are now starting to come in. So just be careful here, you people, please. I suppose, what time is it? Yeah, 9:30. Finish up, just quick boo at the poop coins. A bit of red on the screen. I wouldn't be surprised. Also too, it kind of makes sense with the FOMC coming up here. Was this a buy the rumor, sell the news? We'll talk about this more in the Afterparty show. But I've told you guys before that usually when these indicators, look at this. Now we actually have the fast indicator sitting right now. It was at 96 there just yesterday. I guess 2 days ago, Saturday. Yesterday's reading came in at 93. Oh, goodness. It can't go any higher than 100, folks. And now look at the teal is actually now getting overbought. So you could actually make the argument the crypto rally has done its thing. And if I get any kind of weakness in here, any kind of failure in here, I got to hop off that algo long trade. It turns out that the algo long trade worked pretty well. So I got nothing to complain about. Then also too, just keep, I'm not saying it's going to happen because I mean, like I said, it's not our business to be in the business of predicting the future. But just try and remember that these guys have a nasty habit. I think this is the chart I have it off of, right? I don't know what the hell this is going to look like, but FUMC, oops, FUMC, bang, right? FUMC, bang. FUMC, wait for it, one more fake rally, bang. So the fact that Willie stupidly overbought, the bot setups themselves are starting to say, hey, if you're getting a little bit chicken, maybe you don't necessarily need to be in love with this position. The algo is now officially overbought. You can start to see the writing's, it's starting to build up on the wall. Just, be forewarned. That's all I would say. So, okay. So what I wanted to sort of finish this off with is about a half hour or so. Alts, I don't think anything's really jumped out at me. I mean, it's nice to see some of the names that have put in the W's. They did give pullbacks into reload zones to try and reload. So if you had the opportunity to get in, awesome. I think I've told you I've got a whole bunch of levels that, if anything, I want dumps. Look how many things I want to buy. I want to buy this thing down here, not up here. So I actually want to see a nice crypto dump here, right? We see that the breadth indicator is starting to get overbought. And if anything, if I start to see some serious weakness come into the market, then, we start dipping back against these lows again. I might actually come back in on the buy side. And I don't see anything to be done here today. And if anything, what I kind of need is for the market to get punched in the nose to sort of, knock this recent euphoria out of price. It's like I've got to be patient and disciplined. It's as simple as that. There are names. I mean, we might find like this ARPA. You might find that this thing has to come all the way right back down. I hope not, but it might. I wouldn't chase that there. But if we do dip right back down, in fact, actually, probably at this point, what I would say is, what's a 78.6 now? Right. So if we go reload zones, interesting. 78.6 has not changed a whole hell of a lot. So, if you want, here's a good example. Somebody yesterday had asked me, well, Brian, would you still respect this W a month or 2 months, 3 months later? As long as 78.6s are still down in this area, yeah, I'm okay with that. So, that's your market state. A bit more reds coming into this market. But, I've kind of told you guys, and of course we'll do this on the show. What is it? The Afterparty show. Lots of sixes. And you remember yesterday we kind of talked about this, how, actually this is good. So it's good to see that this updates on a weekly basis. So BTCU now, remember yesterday it was a SIC because it was at 21, but prices jumped up quite a bit. We're actually pretty close to the 50% level now. So as a result, no more SICs. But I've said repeatedly, if we get dips back down against the bottom ends of ranges, I showed you a number of altcoins there that I'd like to buy because we are still 5s and 6s. We're not like, 1s and 2s and 3s where you better be careful. But I still think pullbacks are buying opportunities. And that's the way that I see the market here today. All right, that's about a half an hour. Not much news-wise going on in the world. Not much econ-wise going on in the world. Big FOMC event coming up here midweek. Julian's doing his baby powder report Wednesday morning. If you're a fan of Julian, just be aware of that. It'll be one day earlier because he has to travel. And slow and steady wins the race, right? All right. Hope you guys have yourselves a great day. Consider joining us for the after party. Couple advertising things. Number one, actually, I'm really pleased to see. Oh, by the way, if you like this, hit the like button, subscribe, ring Colleen's bell for notifications when the next video starts. I love doing this because now I'm like a total social media dude, right? Links to everything that we talked about today are in the description down below, I suppose. We'll do guns, shooting guns. Woohoo! We'll do oh my God, it's Monday! Can you believe it's Monday? Oh my God! Whatever. I hope you guys all enjoy that. Get some sort of laugh. Hopefully, I put a smile on your face. PMA for the win. Let's try and get the subs up to 8,000, like I said there a moment ago. I'm actually really pleased. The site numbers are actually growing. So the YouTube channel subscription. So thank you very much. Tell a friend if you enjoyed my comic stylings, or if maybe happen to have a thought or two that maybe led to a half decent trade idea. PMA for the win. What else am I supposed to talk about? We talked about the boot camp. Oh, we have Zach's level 3.5 spreads course coming up here this spring summer. We're going to do like a pilot project here this summer with the course offering. Got to tell you, almost all the seats are all taken, so don't really need to advertise too much more for that. But if you are interested, if you are a spread, if the level 3 options program whetted your appetite, and you wanted to take your options trading to the next level, I think Zach's done a fantastic job putting together a number of different modules to show you the various different spread strategies that he employs on a daily basis. And I also like spreads myself. We've got the boot camp if you're really serious about sharpening your day trading program skills. That's filling up nicely, so just let us know. We have to make a hard decision at the end of this week, actually the end of next week, but this week, next week, as to what size house, Airbnb house we're going to book. Does it have to be a big castle, or can it just be a medium-sized house? So if you are interested in that boot camp, I had another person reach out to me today. I'll maybe talk a little bit more with him going forward. But you better let us know sooner rather than later. And then of course, we do have, as always, I'm sure the link is in the description below, as I'm supposed to do. But we do have, if you're watching this channel for the first time and you're like, oh, he keeps talking about learning about the process and learning about running a small business of trading, and I want to get this course for free. Well, you can pop on over to this page. Should be in the description, links below. You can see our next program intake starts in 42 days. If you throw your name and your email address on this registration form, it's just sort of a expression of interest. There's no obligation with this, but we do have a raffle every term, and you never know, you might win the seat for free to the level 1 program this coming spring. So also too, this is an excellent page to just learn about what the heck it is that we do. What do some previous students think about the program? Has it changed lives? I think it really has, so that's awesome. Jojo, we did exactly what you asked. And of course, at the bottom, actually, it's a nice detailed actual what is it that you're actually going to learn here in the program. So it's a great page that the team has put together. Okay, I think I'll leave the rant at that. Hope you guys enjoyed the offering. PMA for the win. Go slowly here until we're on the other side of the Fed. Frankly speaking, I don't know what the heck this market's going to give us heading into this coming weekend. But my hunch is that there's going to be some fireworks into the latter part of the week. So go slowly. Remember what your number 1 job is. Be curious. If you're watching this video, do me a favor. It would be great sort of feedback. I can get sort of, sort of an idea of how sort of educated this audience is. Who can tell me what your number 1 job as a trader actually is? A lot of people get this wrong. So in the comments today, your assignment is tell me what your number 1 job as a trader is in the marketplace every single day of the week. All right. Have yourselves a great day. PMA for the win. All the best, and bye for now.